Yes.
Okay.
Yes, you can.
This is the assignment I gave you in the last class that I expect you guys to have taught. So since we are 3 here now, we will pick 1, 2, 3. We will study we'll go through the case study. We will now solve question 1, 2, and 3. Anyone that join, I'll be putting them in your group. Or that will be too tough, Abi. That will be too tough. I'm looking for something that we can do fast. And we'll see add you guys will get value for money. Okay. Okay. Let's focus on number 1 only. Number 1 only. Look for the relevant exhibit that speaks to number 1. So we have 1A, 1B, 1C, 1D. Go to the exhibit. Hope nobody has dropped out because students they don't like Ogechi is here. Damdola is here. Who dropped out? Esther dropped out. Wow, she ran away. Maybe network, I guess. Network. She will see join. So you go through the exhibit. First, this is the exhibit. But if you want to know the exhibit that tackle question 1, you go to this beginning of the question. This is how you meet it in the exam. This one will be your present. The one you are seeing now, that contains B to be your present. While this will not be the question. So you start from this question that will guide you on the exhibit before you now go to the exhibit and take down the exhibit. Let me allow you guys to read first. When you finish reading, now tell me what you understand before we go to the question. Can we quickly do that? Eh?
Yes, we are doing it.
Okay. That is the starting point. Go through the question, then the exhibit. Then we will now discuss what you understand. So that technique matters most. In the exam, to be only you. But if you can get it right here now, then the exam, when it's only you, there will be no fear. And the question discuss what we explained last week. And I'm not sure some of you have gotten your textbook already. If you have gotten your textbook, you must have studied during the week. Now, let me give you a caveat. This subject, SBL, is a nightmare of most ACCA students. Why? It is very easy to pass, like I explained last week. And if you don't get it, the other side is the case. So my pain I'm going through now is how you guys will understand it. And like I mentioned last week, most of the work lies on your head. That is 67% is with you. The 33% that remain is for me. And I will do it lovingly. If you observe, I shared some material with you last week. I expect you guys to use to complement your textbook that you have read. The material I shared last week, if you have used it to complement your study, you will have proper understanding of the topic we did last week. We did like 3 topics last week. And And today we'll be teaching like 3 topics also, or 4, because we must complete your syllabus before end of October to allow you guys time for revision, whether individually or with the center. So let me gauge how you can understand the passage. Then we'll now pick it from there. Ogechi, do you have the question?
Yes, I
Ogechi,
do.
can you
I
hear
do.
me? Okay.
I'm going through it.
Okay.
Yes.
Okay. Thank you. Good morning. If you are just joining us, we are solving the question that was shared last week. We are reading. I want to gauge your understanding and know how to go whether deeper or more higher in my presentations. So we have to read the exhibit, read the question, and go through the exhibits. And from your understanding, we'll discuss and see if you can attempt the question. So those that joined earlier are in the middle of it now. They are almost through. So as we are just joining, Ajoke and Kemi Amos, please. I don't know if you are in the group. If you are not in the group, let me see if I can drop my number on the chat so that you guys can chat me up and I'll share the question with you. If you look at the chat, I've dropped my number there. I've shared the number there. If you chat me, I will share the question with you. If you're not in the WhatsApp group or the center, it's appropriate that I weigh your understanding of the question so as to know how to go better. And now, as I've also shared some material with them last week that you need to actually go through. I didn't say you should chat me here. You chat me on your WhatsApp so that I can share the question with you. Hear me, Amos. You say you can't hear me clearly. Open me, Richard. You say you can't hear me clearly. Can you hear me now?
Yes. Yes, sir.
I
No,
was
the
saying that
person that is taking the net, yeah, I cannot hear the lecture very well.
I say some of you are not in the group, and I want to share this question with
I
that
have
you
the
should chat me
question.
so I can share the question with you. Oh, you have the
I
question.
have
Okay,
it.
okay,
Yes.
okay. Okay, let me have your attention now. Based on what we have read and the exhibits, I'm sure you guys must have a kind of feelings of what you are about to face. Okay, so let's quickly run these slides within the next 90 minutes. I will now go back to the question solving. Please confirm if you can hear me clearly.
It's much better now. It's clearer.
I can. Yeah,
Okay,
better.
so today we'll be looking at everything around governance. Last week, we looked at leadership and professional ethics and everything around leadership. I'm sure the video is already uploaded along with the studied material tests that will aid your proper understanding of leadership. So today we are going to governance and everything around governance. Next week we'll be going into strategic planning and execution. But the topic we studied last week has a lot of coverage in the Kaplan or BPP study test. So please get your study test and read deeper so that you will not be caught unaware for your exams. So today we are starting with governance. And before we get to governance, there are materials that you need to download to guide the understanding of governance, especially corporate governance in Nigeria. If you are in Nigeria, you must get what we call Financial Reporting Council of Nigeria Code of Corporate Governance 2018. Then also get Central Bank of Nigeria Code of Corporate Governance 2022. Or thereabout. Then if you're in the UK, we have the UK Code of Corporate Governance 2024 and ICGN Code of Corporate Governance. That is the International Corporate Governance Network. Yes, Code of Corporate Governance. Then we have this other one. I remember the name. That's their mother. That one was 2021 or 2020. So, proper understanding of corporate governance, you need to download this material and go deeper. So let's dive straight into what give back to corporate governance, which is the agency and stakeholder management. So we'll be covering agency, looking at stakeholder theory. There's certain stakeholder role and stakeholder responsibility. I'm sure you are familiar with this in your CSMA class, and I will just brush through as a kind of a reminder. When we talk about corporate governance, I'm sure we all remember that is the way that an organization is being managed. And corporate governance assists an organization to act in the best interest of the stakeholders, not just the shareholders. There are several interests that are tied to a company, but the topmost is the shareholder because they must get optimal return for their investments. So for effective corporate governance, it must ensure that those that are engaged to manage the company are acting in the best interest. Now, let me create a caveat. when we have a company, three things are involved. Three things are involved. Please note this. This will guide you in any ACCA question. First one, we have owner manage. Owner manage will be in the form of whereby the owner is the one that is the MD, or the owner is one that is the chairman. By the way, I'm sure you all know the difference between the CEO and the MD. If you are here, you don't know the difference between the CEO and the MD, please speak. We explained it in our last class. So, for an owner manage, the MD, the owner can either be the ED, the MD, or the chairman, or the owner will be partly involved with the owner of the company. For example, Touch Bank. For example, Earpiece. For example, UBA. For example, Access Bank. For example, Senate. Name them. The owner, even FCMB, the owner will be involved, and they will have one active role, either as chairman, the group managing director, the managing director, or one of the executive director. In such a company, the way corporate governance will play, even Dangote, the way corporate governance will play will not be the same as when the owner is not involved at all, like First Bank, Fidelity Bank, Aero Contractor. The owners are not directly involved. They are the shareholder. They are involved in form of shareholding. So they have directors, they have board of directors that represent the interests of various shareholders. Real corporate governance we play in that place is also different from the real corporate governance we play in a mere Nigeria Limited, whereby one person is the chairman, CEO, MD, and that's the owner that takes on function. So in this three scenario, corporate governance plays differently. And if you are working in such company as accountant, as auditor, or even as a CFO, the way you apply stakeholder management differs. So let's continue. And that creates agency problem because when we have very interests and the owner are separated from the owner, there is what we call agency problem because the owner is the principal. The directors that are engaged are the agents that are engaged to run the company on their behalf. And there is most celebrated case in early 2001, which is around Enron. And that will be my first assignment to you. Review the case of Enron and summarize issues that caused the breakdown in their corporate governance as it concerns agency problem. Please, whenever I give an assignment, please let's attempt it. Feedback in an assignment helps you greatly in an exam. Like the assignment I gave last week, most of you did not attempt it. That's why I had to allow you guys to go through it this month because the key to passing SBL is solving assignments, solving it and getting feedback so as to know how to improve. So Aaron is one of the most celebrated cases whereby, and it's one of the forefronts that strengthen the corporate governance principle. Before then, we have the Turnbull 1990, we have one other one 1999. But the Aaron case established strengthened the various arms of corporate governance. That is when ISA, International Standard of Auditing, becomes strengthened. That is when major risk methodology becomes strengthened. That is when major corporate governance started generally, the Aaron case. And Aaron case also gave out to what we call Sarbanes-Oxley and UK corporate governance goals, although that one has been updated now. The Sarbanes-Oxley is a very powerful that gave out to many other code around the world, including the FRCN. If I go to the FRCN code of corporate governance and CBN code of corporate governance, you will see a strain of Sarbanes-Oxley among them. So for agency principal relationship, let's take a particular example. We have a company that is listed, and in next year's exam, always watch out. When they mention a listed company, they are expecting a separate corporate governance framework from a non-listed company. Whether you are solving SBL or AAA, once you see listed, you must raise your skepticism. They are taking it to a higher notch. A listed company which manufacture and sell switches, and they are listed on the stock markets, and they have adhered fully to corporate governance guidelines in terms of board and committee structure. Sweetco undertook a strategic review 2 years ago and expanded its operation to include a new factory, which was built on the land located for Sweetco by a real estate broker. Explain what are the nature of agent-principal relationship and accountability in the company structure. What can you think of other than the director and the stakeholder relationship? You know, we say there are many stakeholders in a company. So aside the shareholder director, are there any other agent principal relationship considering this case? If you have an answer, or mute your mic and speak out. If you have an answer, unmute your mic and speak. And there is no wrong answer in my class. Aside the shareholder director, based on the scenario we have here, are there other stakeholders involved?
The government.
Thank you. Who else?
The shareholders too.
No, the shareholder is already there.
Okay.
Other than shareholder director.
Okay, we have also the non-executive directors.
Okay. What else?
The employees.
Okay. You know, the question says briefly explain. What you are saying, you are just dropping names. You must explain the nature. You must explain. So when the question says explain the nature, this is what they are expecting. You can see the question says briefly explain the nature. Briefly explain. Briefly explain. SBL is a very trickish case subject, like economics. In your secondary school. So when they say briefly explain, they are not just expecting you to just drop name. Look at it, a typical answer, what it will be. The typical answer would they will explain what a principal-agent relationship involves. And for the directors, they are acting as agents on behalf of the shareholder. You get that? And for the new factory that they are having, the real estate broker is also an agent. The auditor is an agent. And like some of you already mentioned, directors and employee are agents. Somebody muted me. Who is that? Once you are a director, you are the part owner of the company. So you can see the way the question is answered. So please, let's take notes. It can be short, a short question, but if you have read deeply, these are what is expected of you. You have to consider all the scenario. Like they say, it's a manufacturing company that sells switches. And they mentioned in the last paragraph that the land was got together by a real estate broker. That real estate broker is one of the stakeholders. Because if they don't manage him, they become homeless, they become company-less. Other one is the shareholder and the auditors. The auditor engage the shareholder. And one funny thing is that in theory, the auditor should be engaged by the directors. But in real life, we all know what happened. So that the auditor can maintain their independence. So now let's look at the stakeholder theory. One of the most popular stakeholder theory is involve how you manage several stakeholders involved in the business. One of the shareholder takes all. In fact, environment, social governance is now at the forefront. Now it's no longer more about people, the shareholder or the stakeholder. Now environment is being considered, and that's what gives out to ESG. So for stakeholders, any group that are affected by the dropping of the objective is a stakeholder. And that's where we have two broad approach, which are instrumental and normative approach. Instrumental is in the sense that I just see them as a means to an end, which means they are just the company is just there to make profits and not to give anything back to society. Or as a normative approach, whereby as a part of moral duty, a certain CSR are being considered. If CSR are being considered, then there must be stakeholder management. And stakeholder management, like we mentioned last week, they involve how we manage people that are involved in managing the company. And when we talk about influence of several stakeholders matter most. Influence in the sense that the objective of the company, how they can manipulate it to their benefit, or how they can support it to their disadvantage. And once influence is splitted, you now have power, interest. So when we hear influence, it's something as power times interest. Power multiplied by interest give you influence. So if you break it down, high power, high interest, low interest. When you have low interest that meets low power, you put minimal effort. But when you have low interest that meets high power, you must keep certified. But when you now have high power, low interest, you must keep informed. But when you have high power, high interest, they are the key player. You must carry them along in everything you do. They are the decision maker. Most students often confuse high interest, low power with low interest, high power. The way you handle them are different. Let's break it down using practical example. Low power, high interest. This does not have power now, but he has interest in running the company, in the running of the company. He has low power now, but he have high interest in the running of the company. Since he have high interest, you must keep informed on relevant information. You can see, because of the interest that he has, you must keep him informed so that you will not feel dissatisfied. But when you have low interest, high power, his interest is very low, but it's very powerful. That any decision that he takes affects you. You must keep them satisfied. Anytime that their low interest is tweaked, whatever they want, you must ensure they are satisfied. And various stakeholders that are involved in this, we get to learn them in this question. Let's look at a football club. Since most of you here are football fan. The guys, you have the floor now. Using this stakeholder matrix, who are you going to place in each of these boxes using a football club? Please, let's speak fast. Using a football club, who can you put in this? Can you put in this box? Using a football club.
Which box? Sorry.
Okay, let's use Man City. They are the Liverpool or Man City. Any club that you support that you know very well. Which stakeholders will you put in this box? Or
first
let's
one?
say all the boxes.
Okay. We have the okay. We have the club owners.
Where we put them? Where we put the club owners?
Club owners. I think they should be key players.
Okay.
Because they have high power and high interest too. We have also the fans. The fans, they have high interest, but low power, if I may say. Then the players themselves, they should fall under the key players too.
In fact, everybody should be in key player, right?
Yes.
Wow. Wow. Oh yeah, who is here that can support us? Please, let's speak. Anytime by the class, let's participate. Adiza,
Yes, sir.
where are we putting who? Kemi
Okay.
Amos.
Okay, so for me, I feel the key players are like the club owners and the major sponsors. They have high power and high interest.
Who are the keep certified?
Keep satisfied. The fans.
Okay. What of a keep informed?
The fans too.
This Medelo mapping, stakeholder mapping, is in the question that you guys are reading now. Question 3 is around stakeholder mapping. That's why I'm taking my time for you to understand it. ACCA will not ask you stakeholder mapping direct. They will ask you in the form of how you need to apply it. Why is Okoyemi Richard not speaking? Okoyemi Richard, are you there?
So I would put the chairman of the company, the owners of the company, in low interest, high power. That's keep them satisfied. Then
Okay.
the current managers of the company, that would be high interest, high power.
So look at your screen, Richard. Do you agree
Okay.
with my assertion?
Yeah.
Ogechi, do you agree? Maybe most,
Yes,
do you
I can.
agree?
Yeah, I can see.
Oh, yes.
Yeah, true.
You
Yes,
must think
somehow.
wide. You must think wide. You can see we have fans, we have shareholders, we have the media. The media are the one that provide the money. Sponsorship. When you hear that sponsorship, it's the media that have the money. Then the regulators, they are II. Look at the sports sponsor and the taxman. They have high power, low interest. Look at employee,
Yes,
the
all the
players, the
fans or the
coaches. The fans are II. They have high power and high interest. Look at Chelsea, for instance. Anytime you want to sack any Chelsea coach, the fans always started it. Same thing with Man U. The fans always started. They're low power, low interest. Although they put banks, because banks don't provide most of them money unless you take loan from them. Like when Arsenal took loan from the bank to build the Emirates, the banks moved to high power. So the stakeholder mapping is not fixed, it's dynamic, depending on the scenario. For example, during the Yaradua tenure, the vice president was seen as low power, low interest. But look at how things turn around and it become high power, high interest. So in any company you are, you must always know how to manage this stakeholder. If you don't do it, that's where you have problem. If your friend become an MD of the company today, you know your interest will definitely change. He's no longer your friend, it's not the MD. That you must say sir when you are answering it or ah. Because if you are still dealing with him as if is this your friend, you know you are going to have problem. True or false? True or false?
True.
True.
It's true.
So please, this stakeholder mapping is very key because most of us here we are already CFO, we are chief strategy officer, we are chief audit executive. Some of us are even CEO already. I'm sure this is the survival tech tools for
Please have a
any
question.
organization. Okay, what's the question, ma'am?
Please, can you have one stakeholder in two of the metrics? Like maybe funds now. can they be under keep satisfied and keep informed? Or you
In
make
the
sure you have
question,
just one.
unless we have groups of fan. If you have group, maybe the fan is divided into 3 groups, and the question
Okay.
specifies that. So you must indicate them by the group.
Okay.
But one must be in one particular box, or else you'll be contradicting yourself.
Yeah. Okay. Thank you.
Okay. So the stakeholders, so we know the director, they are for strategic direction. It's good to be a director. It's very sweet. Every time I'm preparing my board audit committee reports, you see the way I crack my head. Same thing with you too. If you're head of HR, I'm sure you prepare quarterly reports to your governance and nomination committee. If you're in marketing, head of marketing, same thing. But employee, they are also part of the internal stakeholders, and what they do is just to carry out instruction. You are paid to carry out instruction. But if you want to be a layer of a top employee, you must be able to think when carrying out instruction. If you can think before carrying out instruction, you grow faster. And when you're thinking and you get to the director and the director say, no, your thinking is not right, don't argue. Say, oh, thank you for the value addition. That's where emotional intelligence comes in. So stakeholder management embedded with emotional intelligence, you will grow faster in your organization. So we have the shareholders as also among the internal stakeholders. These 3 internal stakeholders are very key and very powerful. And if you look at the matrix that we define here, they are there. They must be there because these 3 internal stakeholders must be properly managed. If they are not managed, it's like a man that is not managing his wife very well. He will get problem because your internal stakeholders will not give you rest. If internal stakeholders are not properly managed, then these external stakeholders will be troubled. You can see the external stakeholders, trade union, auditors, regulators, government, suppliers, lenders. They are also key, and they have several roles to play. And one of the roles is part of not only contributing to social responsibility, but also ensuring that different divisions among these stakeholders are managed. When you pick your study test, there are many divisions among stakeholders. The only one I'm showing here is internal and external stakeholders. We have narrow and wide stakeholder. We have primary and secondary stakeholder. We have like 7 other subdivision of stakeholders based on your study tests. That's why I'm laying emphasis on you getting your study test so that you can know those other divisions of stakeholders. So I will still share some material with you at the end of the class, but those material are to corroborate what I've just taught you. So when we talk about the CSR is how a company is ensuring that they are giving back to the society. And then you give back to society, it must have positive impact. Positive impact in the sense that there must be ethical stance, which means, are you laissez-faire? Maybe you don't care. You don't care just for you to make a profit. There's a particular bank that most of the employer, they don't promote them on time. Maybe once in 7 years, once in 8 years. And by the time you get promotion once in 8 years, you use your promotion letter, you'll be crying. But in some company, every 3 years, they are sure of getting promotion. Every 2 years, they are sure of getting promotion. Those ones, they won't cry. So when you have laissez-faire, it's different from when you have enlightened self-interest. Enlightened self-interest is what you are doing, knowing that something will come back to you. Like now, most companies, most banks, they like giving CSR to organizations that will allow them allowable tasks, in which that kind of CSR will be tax exempt, like going to motherless baby, like going to those companies that are listed behind in the tax schedule. That is enlightening self interest. Then we have some form for shareholder interaction. Maybe after the shareholder AGM, there is a decision that this particular sector, let's support them. Like during the COVID, most companies are giving support to hospitals, support to the state government to fight the COVID. Then we also have what we call shapers of society. If you look at what some banks are doing, investing in telecommunication, investing in electricity, they are doing that to be a shaper of the society. So in the question, always observe what stance are they looking at? What stance are they are they driving towards? I must understand that particular aspect. And in doing an effective CSR, it makes the directors, it makes the organization to be seen as a corporate citizen, a good corporate citizen. Why? Because they are trying to minimize harm to the environment and the society. And as such, they are maximizing benefits. When you minimize harm, you maximize benefits. Maybe in form of CSR is scholarship for primary school children. If you don't give a scholarship to do primary school children, those children will grow up to be a tout, and they'll be collecting owajugbo from your staff. But when you allow them to do primary school, and you also sponsor secondary school for them, Yoruba we say Ìrọ̀rùn ẹja, Ìrọ̀rùn ẹyẹ, or how do you normally say it? When those around you are comfortable, they have confidence. You too, you always grow up to have confidence. A father than a director that neglects his responsibility for his staff. A director is wearing nice suits, but when you see the staff, they are wearing boneful. They are not well fed. They are looking malnourished. When the director's birthday comes, we don't remember to buy him gifts. Even if they buy him gifts, maybe they buy him a cup and they wrap it and they give it to him as gifts. But when a director says that their employee are well paid on his wedding day or on his birthday, he will know the kind of gift that we accept. That is what this minimize harm and maximize benefits is about. Also, when I say be accountable to his stakeholders, accountable is managing them. When you manage them, you'll be able to obtain real benefits and ensure that a lot of things are driving for them. These are the material I will share with you after this class, and for you to go through. And having given you that background, we will now look at what the exam will look like. The exam we have one in the question that I shared with you. You have one in the question I shared with you. They will not mention that particular CSR for you, topic for you, but they will paint the scenario in which you must think. And when you are thinking in line with the question, you'll be able to properly understand and give the relevant answer to what they are asking. So this will take us to the corporate governance scope and approach. What are the approach to the corporate governance scope that we're talking about? The approach will depend on the type of investors and the ownership structure. You can see I'm laying emphasis on ownership structure because ownership structure will play a key role in the nature of the corporate governance that will take place. When we are looking at the ownership structure, you must consider first who are the investor. Who are the investor? The type of investor, what's their role and interest? What's their influence? And are there problem? When you have individual investor, there is no problem. What they are after is just their dividend. With individual investor, they don't have too much of cost. But recently, I learned that this managing director of Zenith Bank bought shares worth close to was it not 14 billion or thereabouts. That particular individual investor, we have some institutional investor masked behind that. Those funds may not be our money, personal money, but those funds can be from some institutional investor that don't want to be known, that don't want to be seen, that don't want to be seen. So when you are hearing some individual investor, don't be deceived. Don't be deceived. I want to use one particular English. There are instances whereby institutional investor masked behind individual investor. But in some instances where there is free fair play, institutional investor will come direct and they will invest direct in the organization. And when they invest direct, they will have high influence. They will decide, they will have a seat on the board of directors, and they want to head one of the board committee. And when they are doing that, there will be problem. Problem in the sense of conflict of interest, problem in the sense of monitoring costs. And monitoring costs is about the external auditor that are being run to manage, and also the internal auditor. And most times, they are always looking at short-term perspective, how to make their investments and run out. For example, if anybody is aware of iFitness, there is a particular investor that invested in them. Before they came, things in iFitness are not expensive. But they came in, push everything about iFitness up, though they invest a lot, increase in branches of iFitness, but iFitness became expensive. When they make their return, they sold it to another investor who is still supporting iFitness now. So when you look around you, you will see a lot of that particular problem around institutional investors. And in your ACCA exam, ACCA dwell more around institutional investor. And when you look at institutional investor, you must consider the ownership structure. What ownership structure are we looking around? Is it where the company is being managed by the owner? Or is it where the company is being managed by agents? Or is it a family-owned business? For example, if you look at like FCMB, it's family-owned business in Nigeria. If you look at Fidelity, it's family-owned business. If you look at Sterling, it's family-owned business. Look at Access Bank, it's family-owned business. Is it family-owned? If it's family-owned, you must know that if you have not greet the family good morning, or when the family head is doing birthday, you do not pay special attention, there will be trouble. If it's family owned, there are different ways in which things will play out. But if it's owned by few, it's owned and managed by few. It's owned and managed by few. It's a lot of different board game. Those few, they may be on the board, they will just be shareholder. But if they are on the board, they hold high power. And in any question you are looking, always consider, is there any ties between the owner and the manager? If the owner is same as manager, your question will be simple. But if owner is not same as manager, there will be tougher analysis that is awaiting you. So when you are seeing a question and you are considering the ownership structure, always look at it. What is the tie between the owner and the manager? And if you look at the question that you have with you already now, you observe some ties between the owner and the manager, which makes it more a kind of insider base. But if an insider is always managing the business, they have most information. And one of the advantages, reduce agency problem. They won't play much emphasis on getting the auditor to do most of the things that they can do by themselves. And they will have more long-term view of the company because it's their company and they want it to be successful. So they're able to tackle most of the problem before they grow. But it has a disadvantage, like Dangote company. There may be potential abuse of power. There will be minority shareholder lack of protection because you are a minority and the owner is there. You will be taking the crumb that drop from the table. And anytime they have a non-executive director, those non-executive directors, they are just there to checklist. They are not the main guy. They are just there to fulfill the checklist of corporate governance, wherever we have the owner being involved as insider. And I'm sure from experience, most of you must have observed something of this nature. And where it works better is if owner is not involved. But owner these days, they want to shoot their eye on the business. And that has been leading to most failure of most fintechs. Because God has given the vision to be the founder and the owner. That does not mean you have the skill to run the company successfully. That does not mean you run after every fund that are available. There are some people, experts, that are there to support you. But if you don't follow that, then there will be issue. So that takes us to the principle, the approach that accountant must involve. I think we discussed this last week, and I just want to elaborate elaborate more on it. When you are reviewing stakeholder management, there are some approach that you need to involve. The approach is looking at, based on the governance structure, is there any threats to compliance with fundamental principle? If there is no risk to compliance, then you have no problem. But if there are risks to compliance, then you must have appropriate safeguards. And one of the most surest safeguards is the stakeholder management. Stakeholder management will help you to know how to reduce the threats to minimal level or how to eliminate the threats. Let me cite a practical example for you. There was one company I once worked as a head of audit. And when I joined the company, on my first day, when I was doing onboarding, the head of HR told me that I'll be reporting to the ED. I said, no, why would I be reporting to the ED? That as head of audit, I should be reporting to the board audit committee and administratively to the MD. I never knew that that was the greatest mistake I will make. Because the ED want me to report to him so that, because the ED is actually the owner of the company. And he wants to be involved on whatever all the audit is doing. And so that whatever the auditor is doing, he'll be in charge. You know, the head of HR will report back to the ED that this is what the head of audit said. That was the beginning of the problem. Not problem per se, but no matter how good my presentation is, the ED must find fault in this. That I was not dot and that T was not cross. Even if every other body clapped, there must be comma from the ED. And one unfortunate thing is that his friend was not made the chairman board audit committee. I observed that the chairman of board committee always ask personal question rather than talking about the audit report. At my first board meeting with him, I was talking like normal human being. When I now observed that everything I discussed in that meeting was now being reacted to me in real life after the end of the meeting. The following board meeting, me too, was Arami. Wherever story is being painted, me too, I'm now talking like Peter Obi. Painting scenario that wherever feedback is given back to the executive director is nice. That was when I started breathing better. That was when my confirmation came. I said, wow. So the head chairman budget committee is a friend of the ED. I think that I never observed that, and I'm dealing with that chairman budget committee like normal person. I will not last well in that company. So I'm telling you the benefit of this graph that you are seeing on your screen to tell you that how it will help you in your professional life. And when you are looking at some regime, compliance for corporate governance regime, if you look at FRCM code of corporate governance, it's a principle base. It's a principle base. In some company, it's rule base. Rule base is comply or explain. Rule base in UK is rule base. In some other country is rule base. In US is rule base. But in Nigeria is principle base. You will see it if you are reading the FRC code of corporate governance and CBN code of corporate governance. You see that they put it there. Now this is principle based. But if you pick the UK code of corporate governance and OECD, yes, OECD corporate governance principle, they will tell you is comply or explain. And for those of you in UK, you see that in UK, either you comply or explain. You comply or explain. And one of the criticism is that it normally causes confusion. And most time, it's left to your own interpretation. But it has one of the greatest advantage. You apply according to circumstances. You apply according to circumstances. Although in Nigeria, some people say they are doing principle-based, but they are establishing, applying, comply, or explain. I will tell you why. When they say if you don't comply, you pay certain fine. So they look at the cost of the fine and cost of complying. If cost of the fine is less than what they will do, they will not comply. They will pay the fine. I'll move on. I'm sure you guys can relate to what I'm saying. But the regulator now are now very smart that when they are bring out their approach, they hold corporate companies at their jugular. One of the most recent down is CBN's directive on the forbearance for banks. They say if you are not complying with forbearance, you must not pay anything to your shareholders. What happened is banks are flying to comply, true or false? So these days, regulators are not throwing the approach open to just comply or explain or rule-based. No. Comply, explain, rule-based. No. They will hold you at your jugular and ensure that you do what they want you to do. Any question at this juncture? Any question, please? Any question? Daniela, you're unmuted. Any question?
No question, sir.
Okay, thank you. So now let's look at this. Suggest reasons why principle-based approach to corporate governance may be preferable in developing companies. Like in Nigeria, why do you think principle-based approach to corporate governance is preferable? Why? This is a very simple question. But I failed to give me an answer. Fast.
It allows for flexibility. It's opportunity for flexibility.
I like Kemi. Oh yeah, look at the screen, Kemi. Look at whether the answer align with your own. Look at what is shown now on the screen. Consider the answer that you give. I'm trying to brace you guys up to how you answer a question in ACCA. Look at one sentence. Around this topic and be able to give the reasonable answer to it. So, Kemi Amos, can you read this out for us and see whether it aligns with your initial thoughts?
Okay, sir. Activities 1. Okay. Developing countries' economies tend to be dominated by small and medium-sized enterprises. It will be very costly and probably futile to attempt to burden small businesses with regulatory requirements comparable to larger concerns. Having the flexibility to comply or explain allows for those seeking foreign equity to increase compliance, while those with different priorities can delay full compliance. In low liquidity stock markets, in brackets, such such as those in some developing countries where share prices are not seen as strategically important for businesses, adopting a more flexible approach might be a better use of management talent rather than jumping through hoops to comply with legally binding constraints. The state needs to have an enforcement mechanism in place to deal with non-compliance, and this itself represents a cost to taxpayers and the corporate sector. Developing countries may not have the full infrastructure in place to enable compliance, in bracket auditors, pool of NERs, professional accountants, internal auditor, etc. And a principle-based approach goes some way to recognize this. That's all, sir.
So do you think this question, that answer is right for this question?
Yes, but I didn't explain
Yes.
further.
Pardon?
Yes, but I did not explain further when I answered the question.
So when you are writing, when you are answering your exam, you must explain further, right?
Yes, sir.
Thank you. That's where I'm building you guys up to. So I've mentioned this is one of the approach to corporate governance principle, ICGN. And please, I'm giving you 2 assignments now. The first one is to summarize Enron, how Enron and corporate governance further. The second one for you to download and understand 4 corporate governance principles. FRCN, Code of Corporate Governance 2018, CBN, Code of Corporate Governance 2022, the UK Code of Corporate Governance 2024, and ICGN Code of Corporate Governance. If you understand these 4 Code of Corporate Governance, anywhere that ACCA is bringing that question out from, you will be successful. And when you study it, if you are not clear with it, please chat me up. That's why I'm requesting of you guys to chat me here now. Chat me up. Ask your questions. Why is this so? Why is this so? I will definitely answer you. If not immediately, I must give you an answer. So this corporate governance, this is the jacket that most corporate governance put up. They are divided into 2: the governance aspect and the stewardship aspect. The governance aspect, we discuss the roles and responsibility of the board. That means the chairman, the non-executive director, and independent non-executive director, and secretary, the secretariat. Okay, let me start listing them again. When we talk about those roles and responsibilities of board of directors, we have the chairman first. When you have the chairman, you have the non-executive director, and you have the independent non-executive directors. Then we also have the managing director or the CEO, if they are not separated. In some companies, they will say CEO and the managing director. CEO normally is different from the managing director. When some companies, they are merged together. Then you have the executive director. Then you have the company secretary, and you have the internal auditor and external auditor. All these stakeholders must be defined in a relevant corporate governance code. And your ACCA exam, you'll be meeting up with them. So when you pick up a typical corporate governance code, they will define their roles and responsibility. Board of director, who is the chairman? What is the role of the chairman? You must know that. Who is the non-executive director? What is the role of non-executive director? Who is an independent non-executive director, and what's their role? Most students normally confuse non-executive director to be the same as independent non-executive director. No, they are slightly different. Then the managing director and the CEO and executive director. Then the company secretary and internal audit. If you look at your organogram, if you are working in a standard company, you will observe that all these are actually existing. All these are actually existing. There was a company that once invited me to be their member of their board audit committee, but when I look at their structure, I see that I will suffer more reputational damage if I accept that offer. So what do? I just guide them on what to do. The chairman openly confessed to me that, sir, Mr. Omori, we see that you are more brilliant than us. and for the fear that you may take over this company from us, maybe we will maintain you as an advisor. And I'm happy to do that because I observe their structure. You know, the more you look, the less you see. The more you look, the less you see kind of company. And they pay me off for my consultancy stuff, which is more preferred. So in some company, when you look at their structure, even as an employee, it's better you do not work for them. But most of us these days don't even care about governance structure. Then we have the stewardship principle. Stewardship principle is how are we applying best practice? The board meetings, are they sitting minimum of 4 times in a year? The company secretary, how is he working with the chairman? You know, the head of legal or company secretary must report functionally to the chairman of the company and administratively to the CEO. While head of internal audit must report functionally to the board committee and administratively to the CEO. So when you see a standard organogram, you see that this we have thin and thick line. These are what the guidelines that ICGN provide, and they also provide several rules of several committees in which I will explain to you. Now. So when you look at ICGN, we have ICGN gave us 6 committees. One of them is board nomination committee. These are the forebearer of the company. They are the ones that give birth to the company. They are always comprised of the promoter who started the company. That's why in some company, they will combine board nomination committee with the board governance committee. Because the governance committee will be that we appoint the MD, they will appoint the chairman, they will appoint the auditor, they will appoint the ED. So most of the company, they will have 2 committees first, nomination committee and governance. Nomination will look at how to appoint the key stakeholders. Governance will establish charter. So when you hear charter, company charter, board charter must be documented by the governance committee. So I've mentioned the first 2, board nomination, board governance. They have some other key rules that when you download this material, when you download this principle, you will get to them. Then the next important committee is board audit committee. Board audit committee is the next most important. That's why I've been seeing in most board committees, most companies, they end the ISP after the chairman. Member of that committee, they end the IS sitting allowance after the chairman because they are in charge of the external audit, internal audit, and the finance of the organization. So they look at, they appoint the head of audit, they appoint the external auditor, and they appoint the CFO. All these I'm saying are other normal circumstances. Maybe what we are saying outside is different. I will explain on that. Then the next committee is board risk committee. In some companies, they may combine risk and audit at the same thing. But the next is the board risk committee. This one will now look at what are the nature of the business, what are the risks that can mitigate against the business, and how can they manage it. So they will have their member. All this committee will look at all the organization in total, all the risk involved in managing. That's why some companies they will combine it with risk and audit. We hear board risk and audit committee. So when we have board risk committee, those one will look at how to get a CRO, a chief risk officer, how to get a CISO, chief information security officer. They will consider that if the board doesn't have if they don't have board technology committee or board information security committee or board IT committee. So board this committee will be considering all the relevant risks that the company may face. Then we also have board credit committee. If the company is a bank, there must be board credit committee that will consider all the assets of the organization. These are the major committee that ICGN recommend, and all other corporate governance principles, all other corporate governance code that you'll be reading, you will see all this inside them. Please download this, the four that I mentioned. Study them in depth. SBL will take most of part of your life. But when you give the time, by the time the result is released in January 2026, you will have focus to glorify the holy name. So those are the committee that are suggested. And if you look at this question, he said, discuss the advantage of establishing separate risk committee with reference to ICGN governance principle. Separate risk committee. Separate risk committee. Since most of us are already working, what do you think is the advantage of having a separate risk committee? What are the advantages? Please, let's talk fast. Time is taking. Can you attempt it?
Yeah, I think it's for them to be able to, first of all, save time, and then to be able to meet up with their schedule on time, as in each dividing the functions they have into different parts so that they can be able to achieve all within a minimal time and more focused too.
Look at your screen.
Okay.
That just through that written and see whether you'll be aligned with it or not.
Okay. Risk committee. Where there is no single international model of corporate governance, different legal systems, institutional frameworks, tradition, and culture means that a range of different approaches can be used. According to the ICGN corporate governance GGPs, the ultimate responsibility for a company's risk management approach sits with the full board. However, a board may not have enough time to be proactive in risk leadership due to the other demands they face. The ICGN GGP guidelines go on to elaborate that having a risk committee can be an effective mechanism to bring transparency, focus, and independent judgment to the oversight of the company's approach to risk management and internal controls. A separate risk committee should have enough time to spend looking at risks more widely and focus on dynamic risk, which may have a major impact in the future. A dedicated risk committee can feed through to the board as appropriate to ensure that risk is considered carefully when making key strategic and operational decisions. A risk awareness throughout the company. Risk awareness throughout the company. This is consistent with the ICGN GGP's guidance that the risk committees should be connected to the company's enterprise-wide internal control and risk management system.
So that is for risk committee. There are other one for audit committee. The other one for governance and nomination committee. The other one for credit committee. But when you read through the corporate governance code properly, when you download and read through it, you will learn more. You will learn more important aspect of it. So, any question?
Sir, please,
Sorry, so what is this? What is this GGP here? I don't know what.
Corporate governance is CGP.
Okay, is this C?
Global
Okay,
governance principle.
Okay.
Global governance principle. Like I mentioned, there are 4. OECD.
Okay. All right.
Governance principle. UK governance principle. Then there is CBN corporate governance principle. Then Financial Reporting Council of Nigeria corporate governance principle. Then ICGN. Most of them they take a cue from the ICGN. When you read this ICGN first, and you now read the remaining 4 I mentioned, you see that they all borrow several aspects from it.
So
So in
please,
the exam, you must read the exhibit carefully to identify which shareholder are they carrying to us. Is it internal or external? And what did they want from you? You get it? What did they want from you? And in the question you have in your hand, there are questions around it with you already. So somebody was trying to ask a question. Who is that?
so please, the corporate governance code, I could not get them. Please, can you send it to the group, the one you asked us to download?
I should now do the work that I said to go and do.
No, not the answer, the list of the codes.
No, now I should go and download. Now I should download it for you.
No, I'm not.
Oh yeah, now so yeah. Oh yeah.
She is
Why you
asking
laughing?
that you retweet
I think it's the
list,
link.
the list
I should
of
do what?
the corporate governance you want
Okay,
us
the
to.
list. Okay, let me start again. Number 1. FRCN Code of Corporate Governance 2018. And if that FRCN, every year there are returns that are being done on them every year before March 31st. There are returns that are being done on them. If you read it very well. FRCN Code of Governance 2018. Then we have CBN Code of Corporate Governance 2022 or 2023. CBN Code of Corporate Governance 2022. Then we also have UK Code of Corporate Governance 2024. For a long time, UK was using a particular state corporate governance, but they now updated it in 2024. Then we have number 4, OECD Code of Corporate Governance. Then their mother is the ICGN Global Governance Principle. ICGN Global Governance Principle. Let me tell you a secret. If you don't understand these 5 corporate governance, by the time you are doing solving past questions and you are meeting across corporate governance question, you will have problem. So I've provided summary. And when you read your study tests, by the way, how many of you here have gotten your study test for SBL? How many of you? Please, before next class, last week I gave a contact of somebody you can reach out to get your, or you can get it anywhere. Not get the correct material. You can use one for last diet, for this diet, it's still relevant. Please get your study test. If we
wait.
have now, pardon?
Wait.
I think, okay, were you not in class last week?
Yes, sir. This is my first class.
Madam, you have missed a lot too. Please go back to our video, so that you can, what do you call it? Catch up.
All right, sir. Thank you, sir.
I
You have
sent a
missed a
message
lot.
to the guy, sir. You're selling me 20,000.
That means it has come down.
Eh?
Yes, the original text is around 55,000. So you're asking for soft copy, Abby?
Yeah, soft copy, but hard copy, I think one is like 30 or so.
And so it's giving you 2 material, both
Yes.
the study test and the question.
No.
It
It's
has
each
come
one
down
like
before.
20.
20 each, that is 40.
Yes, that's 40, yes.
If all of you can join body together, all of you can
Yes, when we
come
get
to,
it, we'll share, Abby.
no, all of you
I
can
think
join
that's the
body.
best thing.
That's what we'll
All of
do.
you can join body together. But I cannot. You need to release something for me, and I don't like to do this because I know the code. I don't like to work against the system. If I talk to him and I say I want to buy 4, for me, he will not sell it for me 20,000 each.
Yes.
He will not sell to me 20,000 each. Pata 10 or 15. Because as tutor,
Yes.
but before they used to give us free, but they don't give us anymore.
But please talk to him because I want to buy with AA.
Yes, you guys need it. Okay, if how many of you are here? 7. Do 7 of you need it? Yes. Which one do you need? Is it question and answer only, or just question, or just the study test? So during the
I
week,
think
all of you
we'll need all of them.
All of them.
So let me see how I can talk to him.
Okay.
So give me each of them
Sir.
10,000.
Thank you, sir.
I will talk to him. If I can negotiate with him. So give me
Okay, sir.
me and see during the week somebody start me up. Then you guys will give me your email address
Okay.
so that you will send it
All
directly
right.
to you guys. You get
Thank you,
it?
sir.
I can do
Yeah.
that one for you guys.
Thank you, sir.
Thank you, sir.
Thank you.
So you for example. And I'm not compromising anymore. I'm only trying to help you guys and also help him. If I approach him, although he'll be grumbling that I spoil his markets. And truly he's spoiling his markets. But but it has come down. Before they were selling 25. I think it has come down. Okay, so please, Madam Kemi, look at last video.
Sir,
Whatever you have
okay.
missed 3 topics. Whatever question
Sir, is
you
it on
have,
you?
me, I'm not a
Is it on YouTube, the video?
the video. Ask the
Yeah.
admin. Admin will share the link with you.
Okay, sir. Thank you, sir.
So please, you need to be studying on the go. If you don't start studying now, by the time October is coming or November, you will be punishing yourself. And when you don't study now, you will not be able to ask me the right question. And I want you guys to pass. For you guys to be in my class, you have passed if you put in the right effort. Because I'm going there. No, in some center, they will not be talking to slide. They will just be solving questions straight. They don't talk to slides. But I feel you guys are coming from ICAN backgrounds. I need to make some things clearer for you guys and make the right suggestion. So is that clear?
Yes, sir.
Okay.
Thank you.
So the next one we should go into is public sector governance. But before we go into that, there are some analysis I need to explain to you guys around integrated reporting. Because there is a diet in which integrated reporting came out. 4 questions. You will see number 2D, number 3C, number 1B, 1A is on reporting. So I'll provide a summary for you. If you get your study test, when you get your study test, you can also read deeper on the integrated reporting because it say now is the engine. It has given birth to what do you call this? It has given birth to ESG and several other aspects. But before I proceed on that, let me give you guys a kind of 30 minutes break to look at question 3. Question 3 of what you have in your hand, of the question that I share with you. After 30 minutes, we will now come back and see whether you can attempt it. Question 3 of that I share with you. Question 3 of what I share with you. In 30 minutes, let's provide relevant answer to it. The question 3. Can you see my screen? Can you see my screen?
Yes, we can.
So please
Yes.
read the paragraph.
We can. Yeah.
Read the exhibit in 30 minutes. Let's solve question 3. So this is 10:20. We'll be back by 10:50. Abi? 10:50.
Yeah.
Usually 11 o'clock. I'm a mathematician. Can't be 10:50 back. Everybody, if I call on you, ready to present to answer. Solve it in the format that you can present to answer when I call on you. Please.
Okay.
Okay.
So when we are done with that, we will now proceed to. So in 30 minutes, I don't want any noise. Individually solve. Please don't run away. Some people don't run away, please. I'm giving you enough time. Who is ready to share his or her screen? By the way, somebody gave me a feedback that I should share those relevant material that they can read further to understand the topic. So I'm going to share them now. See, I should share it while in class so that they can download. Am I audible?
Yes, we can hear you.
Okay. So is it a fantastic question? Who is ready to go? Oh, yeah, now, who's ready to go?
Maybe I can start.
Yeah, share your screen. Let's stop sharing so that you can share your screen.
Huh?
I'll stop sharing so that I can share your screen.
No, I didn't do it on the screen.
You must do it on your system.
Okay. I just jotted on the paper.
In the exam, you are typing down.
Okay.
So you must document something to share your screen. Let's correct it together. Who document something? Adiza, Damilola, Kemi Okoyemi. Don't tell me for the past 30 minutes. Which 30 minutes? For the past 45 minutes. You can't document anything.
Actually, I also wrote down on paper. I did as well, but I wrote it down on my book here.
That's not the right way to go. I say document on the system so that we can correct your English. Okay, let me take that for now. Please, going forward, our solution is document it, you share your screen.
Okay.
Do you get it? And,
Yes,
and I mentioned
yes.
it before. I mentioned that that's what we should do. Most students fail because of their English. You get most students fail because of their English. So let's correct all those that now. All those that for now. I'm not happy. Please, let us always document. Okay, so yeah, let's hear what you have to say.
Okay. Okay, the question says that we should evaluate how the relative power and interest of the following three stakeholders and the strategies for engaging them should have changed after the company had become a public liability company. So after the after the listing, the shareholder, from my own thinking, I see that they now have a high power to make decisions and also high interest in getting return for their investment. Previously, before the public listing, they don't have, there's no shareholders. I say it might be the owners that just invested in the company. But after the public listing, the shareholders will have high power and high interest. So they are major key players. Then for the employees, oftentimes their demand is basically how they are going to earn more. So either before or after, their interest is always high, while they have limited power. So you should be able to keep them informed, even though the welfare you give to them can motivate them to do more. So you just have to carry them along in the decisions and whatever policies the organization is going to bring. So for the lenders, what they are interested in is in the return for the money they borrowed. So previously, before the public listing, the company might depend, basically on the money borrowed to start up for the business. But after the listing, we found out that the company might not necessarily rely on the lenders alone. Now the other share capitals will now come in as investment into the system. So their interest will be high because they are looking for the money return on their investments or high interest on the money borrowed. But after the public interest, they will not have the sole power because the shareholders have literally doused the powers of the lenders, even though they still have a little power, but not maximum. So I give them low in the power, meaning that you should keep I don't know, is it keep them interest or I don't know, I can't remember. They have high interest and low power. So that's what I've done.
You are doing well, you are doing well. Don't for my continue, you are doing well.
Okay, that's the lender. That's the 3 I did.
Why I can't hype you? You are just starting now.
Oh.
You are just starting. What skills
Okay.
do they ask you to use?
Oh, okay. Professional skills, analytical skills.
Like the skill they say you to use, that's what we guide you.
Okay.
Oh yeah, Richard, let's hear you. Richard, oh yeah.
Okay. What I have here, so I have that shareholders who have invested in the company, they have high power and interest. And because of that, they need to be managed closely. And in doing that,
First of all, what is the requirement for the question?
okay, the requirement says, minutes. Professional skills, right? Hello. The requirement says using appropriate stakeholder analysis. Hello.
Apart from the requirement, what does the requirement say?
Yeah, it says using appropriate stakeholder analysis, evaluate how the relative power and interests of the following three stakeholder groups, and the strategies for engaging with them should have changed after the company became public limited liability company.
And you have to adopt analytical skills.
Okay, yes, analytical skills.
Yeah, continue.
Before and after flotation. Okay, before and after flotation. Oh. Okay, so shareholders before flotation would have been just a few shareholders. So after flotation, that means that there is increased number of shareholders, and still means that the interest now is now in so many people are now interested in the affairs of the company who have the high power and high interest in the company. So what has to be done in that scenario is to manage them closely. And with
So
that,
which exhibits are you using? To answer your question, which exhibit are you using?
Not sure. I'm actually using the matrix.
No. The question asks you to use an exhibit. Which exhibit are you using?
Not sure. I'm not sure about that.
There's an exhibit. Look at up.
Okay.
Where the list issue on the exhibit to use. Which of the exhibits are you supposed to use?
That's I'm not sure. I'm not sure about the response to this.
Oh yeah, who want to assist him? Which exhibit are we supposed to use?
Exhibit 2, the interview.
And which exhibit?
And maybe exhibit 1.
For SBL, you cannot answer a question without attaching to an exhibit. If you are doing that, it's a recipe. It's a recipe to getting 0. You get it?
Yes.
You know it's a quoted company. And the measureless matrix asks us to focus on shareholder, employee, and lender before and after floating. So we should do before floating. What's the addition? After floating, then we will now show the relevant strengths. If you have gone through the main material using exhibit 6, the meeting with the meeting management, exhibit 1 and exhibit 2. Those are the exhibits you need to use to answer this question. And from there, you'll be able to ascertain the relevant format for your answer. So if you have attempted without considering exhibits 6, 1, and 2, what you have documented will not rhyme with the scenario, and you will not get full mark. You will only get 2. That's why people say they get 9 in SBL. Once you do not align with the exhibit, examiner will not give you 3, 2, 2, 2. Maybe your score will now be 15. And we need to get it right. So let's go through that exhibit. Me, I'm not a teacher that just run through slides for running through sake. No. Let's go through the exhibit. Ogechi was somehow on the right path. But you know, she started well, where she's supposed to like increase the chair. She now says she has arrived. Do you get it? So who else can give us make a good attempt before I move over to my slide? Who can give us a good attempt? Who can give a good attempt? Oh yeah, we are learning. Don't be shy. Who can give us a good attempt? Don't be shy, please. Get me a boss. Adiza, we have two of you should come and support us. Get me a boss and Adiza. Oh yeah. Senator Adiza. Senator Adiza, answer me now.
Yes, sir. I'm here, sir. Yes, sir.
Oh yeah, make an attempt, please. Make an attempt.
I'm sorry, sir. Which question? I was a bit distracted. Question 3.
Do you study it?
Yes, I did.
Which SB did you use?
I used mostly the first one and the second one. That's the meeting, the interview. Sorry, I didn't use the meeting. It's just the interview.
SB6 is also relevant. So, what would be your answer like? Let's start on B. How will you answer B, the B part?
Precisely. Oh, I was thinking it's just the first one. No.
Oh yeah, what's the answer like?
I was thinking it's just the A part. I didn't know where to answer.
Oh yeah, A part. What's the answer?
A part.
A part.
That's
What's the answer?
after flotation. Okay. If I'm to place the shareholders after flotation, I think it's going to be low power, high interest. That we have to always keep them informed.
What will you put them before flotation? Your answer, you must document
Before and after.
where are they? Before and after, yes.
Okay, for before flotation, they were in high power, high interest. That's key players. Is it key players
Okay.
or keep satisfied? High power, high influence.
High power, high interest. They are key. They are key stakeholders.
Yes. So they have to be actively involved.
Yes.
Then after flotation now, it changes to keep informed. You have to always inform them, especially those ones that are like institutional investors, shareholders, sorry. You have to always keep them informed about changes and whatever is happening. Then for employees, if I'm to place them on the metrics before flotation, I think they were keep informed that they have low power and high interest. Then after flotation, they now have high power and high interest. So you have to keep them satisfied. I don't know if I'm getting it. Then for the lenders, before flotation, low power, low interest. That's like just minimal effort. You don't need to put too much effort. Then after flotation, high power, high interest. They have to be well informed. Hello?
Hello, sir. Can I
The
say
way
now?
you are saying it, do you think you are applying the analytical skills that was required?
No, I'll have to explain more.
Thank you. Thank you. Yeah. Remember what analytical skill demand of us.
Yes.
Thank you. Yeah. You see, I'm trying
Okay.
to teach. I'm not lecturing. Once you meet
Okay.
the professional skill that you should use, everything you are writing is off the mark.
Okay, sir. I will learn how to do that.
Yeah, Kemi Amos,
Yes, sir.
let's hear from you.
I did just the A part, sir.
Yeah.
Yeah,
Continue.
before the company is being floated, for the shareholders, they have high power due to limited because they have high power, then high interest. They are directly involved in business decisions, and their interest is for their capital to appreciate. Then after the quotation, their power is also high because they are legally owned now, and their interest is also high. And their interest is high in the areas of share values, dividends, and governance. While for the employee, before the quotation, their power is low and their interest is high in the area of job security, remuneration, and career growth. Then after the quotation, their power is also still low, while their interest is high in the areas of share schemes and restructuring. Then for the lenders, before the company is being quoted, their power is high because they are the key providers of finance, and their interest is also high because they are after their repayments and their credit worthiness. After the quotation, the lenders have low powers because there are more sources of finance like equity, and their interest is also high. Then I guess that is also.
No, you are doing well. Continue.
Then there's no more, sir.
Hmm. Let me tell you what is missing in what you guys are doing. Should I tell you?
Yes, sir.
Yes.
On the surface, you guys have an idea. You guys have an idea, knowing what to write. But when you are lacking is presentation skill, true of us.
True.
True.
So normally, the way my approach in class is to be solving direct, practical. I'll be typing the answer with you. But since you guys don't know presentation yet, I will now do something like this. Okay, let me get my own suggested answer. And by the way, I've shared one material on the chat. Do you guys observe it?
Yes, sir.
You see it? Look at the chat. How many material do you see there?
It's much.
No, don't say much. Is it 6? Is it 5? Is it 4?
1, 2,
11.
3, 4, 5, 6,
Yes, sir.
7,
Go to 11.
8,
No, it's not 11.
9,
No.
10, 11.
I think it's 10. I gave you material on environmental and sustainability because you can't miss that. Then all about stakeholder. Breaking 2, corporate governance inside out. 3, diversifying the board. 4, independence. 5, PSG. 6, integrated reporting. 7, and board committees. 8. Those are the material that will aid your understanding. And you need to understand that material so that by the time I show you my answer, by the time you are now solving your answer, there will be improvement. 1, I want to solve your presentation skill. I want to guide you on how to present. You know, once you know how to present, how to communicate, your issue is half solved. So let me show you how to present. First of all, if you look at the requirements, they say professional skills available are marks available for analytical skills for assessing relative power and interest, and how to engage with this stakeholder before and after. So they give you a way in which you must analyze. And then after using appropriate stakeholders analysis, evaluate. And when you're evaluating, still use your analytical skills. How the relative power and interest of following 3 stakeholders group and the strategies for engaging with them. So using the professional skills, all these things, you must assess them first. Describe them how they are before flotation. How they are after flotation. After describing them, you will now know how to manage them using the Mendelow's power grid, both before and after. So most of you did not consider describing them before or after. You just go ahead straight to placing them, whereby the question asks you, evaluate their relative power and interest. You have to evaluate before the strategy. Look at the question. Evaluate how the power and interest of the stakeholder. You have to evaluate first. And strategies negate them. So when you evaluate them, you will now adopt the strategy by placing them using the matrix. After doing that, you will now clarify yourself. For shareholder, before flotation, why do I do them like this? And after, why am I doing that with them? Actually, Adisa was trying to do that, but she was stopped talking with trepidation, whether I'm Yaba. And let me say, in this class, it's better I correct you. My correction does not have any evil. No penalty, no sanction. But it should guide you better. Damilare, do you get that? And that is what, that is what this question requires. Then for the B part asks that ethical and professional behavior. We've done that last week. And this one says you look at skepticism. That means you are questioning me. You are questioning. Why are they doing like this? Let me tell you, this question, since the last time it was released, ACCA have asked it like 6 times. This was the shareholder, employee, and lender. They will now change it to stakeholder, staff, and banker. I'm not talking about the same thing. Hello, I'm not talking about the same thing.
It is.
If I say stakeholder, staff, and bankers, I will not say the same thing, but in a different way.
Yes.
Yes. So what you guys now is missing most now presentation. So let me show you how this answer would have been best presented. Let me analyze the B part first. So what are the ethical issues that you can see from that scenario? What ethical issues can you see? Remember when I taught you last week, I said you must analyze any ethical or professional behavior along the 5 frames of a professional behavior, along the 5 realms. So when we talk about integrity, is there anything around integrity in that case? Is there anything around integrity? Based on the survey, professional skill is there. It has gained based on the survey and communication. What are the professional and ethical issues that you observe from the part of the CEO and the stakeholders and the HR director? Yeah, I gave you 45 minutes to tell it this. Muri, Damilola, the ethical stance that you observe, what are they? Damilola, are you there?
Yes, I'm with you, sir.
What are the ethical stance that you observe along the 5 professional code?
The ethical. So I did not do that part of the question. I only did the first part.
So based on the survey that was conducted, based on the survey
But
that
please,
was
which exhibit?
I didn't even see anything relating to the survey in
Yeah,
the.
because it was
There was
in the last
nothing.
class we read something like that.
There was nothing regarding the survey in the exhibit.
I think it should be Exhibit 6.
This is the exhibit now. Question, this is the exhibit.
Yeah.
No,
So I think there is like, so I think there is lack of integrity.
when we were small, anytime we commit offense, our mom will say, who did that? It's not me. Everybody, all of them will say it's not me. They will not ask, who did it? Eh? Who goes up the matter?
Okay, 6.
So this is it. So based on this survey now, Leah, let's go through it. Adiza, I pick on you again.
Okay.
Help us read code 1 and
Just
code
saw
2.
it now.
Should we read what?
We help us with code 3 and code 4. As you are reading, we will pick
Yes, sir.
up the ethical issue. Oh yeah, Adiza,
Okay.
please.
Okay. Code 3 from a technician in the data communications components division. I felt the staff satisfaction survey was designed in a way which dissuaded negative feedback, and the key issues known to be of concern to staff obtained from the informal grapevine were deliberately omitted from the survey questions. In addition, the way the results were presented by managers and the visual graphics used seemed to play down the negative feedback and concentrated only on the positive factors. For example, emphasis was made of how well staff regarded their own performance and that of their team members, which seems to have more favorable feedback compared with other questions about confidence in the leadership of the company. I didn't think this presented the true picture of our feelings.
So if you place it along the 5 professional aspects, where we put it? Is it objectivity, integrity, confidential, or personal
I
behavior?
think there's lack of integrity.
So
there.
how will you explain it along integrity line?
So I just feel like if I'm to explain it, the staff had this impression that the survey it's supposed to portray how they feel, and they made it look like it's going to actually portray how they feel and what they are going through. But obviously, there was no honesty about the survey because it's actually saying otherwise.
Okay. What of, do you agree with that?
Yeah,
Me,
yes, because
I felt
the survey has been treated in a way that it will lead to a desired result, and not the normal survey where any outcome is possible.
so. Is that integrity or objectivity?
I think it's lack of integrity.
It's both on integrity and it's integrity mostly. But I think it's a factor of both.
Me, I'll put it as confidentiality. You know why?
No?
Confidentiality.
I'm
Okay,
trying to
yes,
wind your brain
yes.
so that you can think white. When you answer question, you must think white.
Yes,
So,
because
yeah?
I think the survey, like they made it look like it's gonna be like just one-on-one kind of, but they actually made it like public.
Okay.
Oh, it's
What of
going to,
quote 4?
sorry? Okay. Quote 4 from a sales support engineer. We are rushed off our feet due to key staff leaving. Our sales areas are getting larger and it is difficult to get around to all our customers. This means we have difficulty getting our orders in on time and are often late to appointments. Although sales productivity might be improving because fewer of us are covering a greater geographical area, customers are not as satisfied as they used to be and are making more complaints. After this meeting, okay, yeah.
So, where we place it? Is it confidentiality or personal behavior?
Professional behavior.
Why? Why not objectivity?
I don't know what to say here.
You must know what to say. Do you not think that I said that you guys' issue stem from presentation, and you did not digest the answer, the exhibit, and the question fully? So let's start from that.
Professional
Let
behavior.
me start from that. Let's start from that.
There's high turnover, staff labor turnover. So there's a kind of mounting pressure on the remaining staff to do the job.
So let's look at our
They
screen.
tend to get the orders late
Who can guide us
and are
through
often
that
late
B?
for appointments.
Who can guide us through that B? Mr. Richard, please guide us. Mr. Richard, we are listening. Look at your screen.
Okay. B. Should I read it out?
Yes. And
Okay.
teach us. You are teaching us now.
Oh, okay. So professionally and ethically, there are some issues relating to how the staff satisfaction survey has been conducted, which we would like to highlight. In theory, such surveys are beneficial to organizations and to staff if conducted properly, as they help management gain a better understanding of how staff are thinking, what their attitudes and opinions are, and can act as a sounding board from which management can act and make the necessary changes which can improve the culture and productivity of staff. So, okay. So that just explains what the objective of the survey is, which is to ensure that management gets the that, okay, that if the survey is properly conducted, that management will have enough information to be able to improve the culture and productivity of the staff. So, and some items
And
are
you
now
see
listed
how
here.
it was presented. You see how it was presented.
Yes.
Yes. Hello, Mr. Richard, you see how it was presented.
Correct. Yes, sir.
And it assumed that the person that's written it does not know anything, and it simplified it. So yeah, let's start from lack of integrity.
Okay, lack of integrity. Unfortunately, it appears that staff may have been misled in that there were assurances given that the survey responses would be anonymous, but the personal information required gives the impression to staff that management can identify the respondents of the survey. So that's the
True or false?
that's
True or false?
True.
Thank you.
Okay. So
lack of objectivity.
Lack of objectivity. From discussions with staff representatives, it is possible that key areas known to be of concern to staff obtained from the informal grapevine may have been from the survey. Could have disturbed people for giving negative feedback about confidence in management. From a statistical perspective, the results were presented in quite subjective way by using graphs which may have misrepresented the true findings, focusing more on the aspects staff found constructive.
Is actually the exhibit. It's what to paint it together.
And design of survey and the way in which results were presented may be viewed as being somewhat unprofessional and may not have achieved what it was intended to achieve. This could have been avoided if more care had been taken with its design. Confidentiality. One matter of serious concern relates to the fact that some employees were identified and interviewed by senior managers as a result of their apparent negative responses to the survey. This action appears to have breached the fundamental principle of confidentiality. 5. Professional behavior. This year's company management should not attempt to identify dissident staff or schedule and conduct interviews with these individuals, as it could be described as demonstrating unprofessional behavior. This is particularly worrying when some interviewees perceive that they have been intimidated or even threatened by the comments made at some of these meetings. Another point we would wish to raise is the danger of operating double standards. When the survey was supposed to be anonymous, but staff identified for interview were themselves required to keep confidential the fact that they had been identified and interviewed. So they are all correct.
So when you are answering your own for me as assignments, you see the way it was presented. Okay, see. Adiza.
Yes.
Do you have any disagreement on the answer?
Yes, sir.
No, you have the right to.
Okay.
Or do you have any addition? Do you have any addition?
So when we are asked to use a particular skill, what we are going to do is that we list all the points in that skill and try to analyze the scenario to analyze the
Yes,
scenario based on those. Okay.
Based on
Okay.
the requirement.
Okay. I was thinking maybe we just choose maybe 1 point out of it. Okay.
Please, henceforth, I want us to have improved presentation. So now let's go to the A part. And Damilola, you and Adisa, you are the one taking us through this. That will be with Adisa. Adisa, look at the presentation. Take us through it as if you are teaching us. Adisa, we are listening.
Yes, sir. Okay. Which one, sir?
Can you see your screen? Can you see your screen?
Yes, I can see it.
So take us through the answer as if you are teaching us.
Okay. Using the Mendelum matrix, it can be established that before DCS was listed or quoted on the national stock market, it had the following stakeholder groups. Okay, so these are the stakeholders, the shareholders, the employees, and the lenders. So before flotation, these are the groups we have, stakeholders groups, the three I mentioned earlier. Then described below, for the shareholders, these were private shareholders. That is before flotation. They are private shareholders comprising the founders' majority holding and possibly those of family and close business associates. Then for employees, they are mainly non-unionized and loyal to a small family-oriented business. Then for lenders, they are described as insignificant borrowings before flotation, presumably overdraft and other short-term loans. Then after flotation, we still have the three stakeholders group. On here, they are described as follows. So for the shareholders now, wider group of public individual investors. We know before flotation, they said they're private shareholders. But here now, after, they're a wider group of public individual investors because, of course, once you float, it becomes like public and all that. Then they now have 30% holding by institutional investors. Then for employees, they are now more skilled staff, but operating core staff mostly unionized. So before they were not, they are non-unionized and they are loyal to a smaller family-oriented business. Then for lenders, they are now much more powerful and interested. So before flotation, they were just insignificant borrowings before flotation, but now they are more powerful and interested. That's after flotation, obviously. So higher gearing and covenants in place. Shall I go further, sir?
Yes, go further.
Okay. The following table shows the Mendelum matrix positioning and strategies for these groups before and after flotation. Notes, alternatively, a grid could be presented where arrows could be used to indicate where stakeholders have moved within and between quadrants after being publicly listed. So this is just like an assumption from what I just explained earlier. Instead of explaining, we can just have like a normal 4 quadrants where you would put the power, interest, high, low, then the key players, keep satisfied, keep informed, and minimal effort. That's for this one down here. It explains more if you don't want to give a long narrative, but even after the quadrant, I think it's still advisable to just write something down. Then for stakeholders group,
God bless
we
you.
have
God bless you for saying that.
amen, sir. So for the stakeholders groups, we still have the 3 stakeholders, the shareholders, employees, and lenders. Then the Mendeley grid position and strategy before flotation. Then the next one is after. So before the flotation, they have high power, high interest. that is actively involved. So high power, high interest is keep satisfied. Right, sir? Hope I'm not wrong. They keep
High
satisfied.
power, high interest. No, they are
Interest.
the key players now.
They key play. Oh, key players.
Yes.
Okay, sorry, key players. So they're actively involved. That
Yes.
is before flotation. Yes, that's before
Yes.
flotation. So
Yes.
after flotation now, they are keep informed. They have low power, but their interest is very high. Because they actually want to know what's happening and all that, especially for institutional stakeholders, as investors, right?
Yes. That's why you must keep them
Then
informed.
for employees, before flotation, they have low power, high interest. That's keep informed. That's before flotation. But after now, they have high power, high interest. You need to keep them satisfied or involved more actively. Then for lenders, before flotation, low power, low interest. That's minimal effort. But now that they've gone public, they now have a very high power and high interest. Yes, of course, lenders. So you have to keep well informed and keep satisfied.
Do you agree with that?
Yes.
Okay. So, if you are now answering give me your answer, you can see from the requirements we were asked to evaluate. You can see how we first of all evaluate from here. These are the evaluation. That aspect is the evaluation aspect that answers the evaluation parts. The second part is where you are now putting the analysis. So when you put it here, you must now explain the reason for you to put it this way. You must now explain. You will not assume ACCA should be like that. If you just put it like this without explanation, you will not get your full mark. So you must answer. So that's where I want Damilola to take it from. Damilola, take it from the explanation. I'm sure Adiza, when you're answering the next time, you'll be able to present it better, right?
Yes, sir, I should, by God's grace.
No, don't say you should. You will. You will. When you say you should,
will,
that means you mean. All this my efforts. Don't let it go in vain, though. Oluwa Damilola,
yes, sir.
your turn.
Yes, sir. Okay, so this part is basically about the, when DCS company has become a public limited company, some of the strategies would have changed. So here we are looking at the strategies the DCS company management will adopt before and after flotation. So we start with the main changes in strategies would be as follows in relation to the above stakeholders. So starting with the shareholders. So before flotation, private shareholders, being the owner and his family or close friends, would have more interests and power than the majority of the shareholders after the flotation. So before the flotation, they have high power and high interests because the company is being owned and managed by family and close friends. So they have more interest and high power. Then after flotation, so the need to actively involve is less necessary, but evidence from the case suggests that there is a lack of engagement with institutional shareholders, which could be problematic as this group has far more power than other shareholders. So DCSC should develop reporting and communication channels with its important group. So for employees before flotation, most employees were non-unionized, just as Adiza has mentioned. There was, but after flotation, they become unionized, and the culture of DCSC was not to involve or engage or inform employees. So there was no direct communications with the employees, and they expect them to follow instruction. I think this is draft is from the Exhibit 2, where middle managers are they are not allowed to. Middle managers are enjoined to just follow instructions. They are not allowed to how will I say? They are not allowed to present their own opinion. So, but after flotation, 60% of the data communication workforce are now unionized, and additional employment legislation, such as minimum wage and mandatory company pensions, are being introduced. So, which will force DCS to not only keep employees and their representative informed and fairly well satisfied, but also to more actively involve them in particular regarding the pension arrangements. So before flotation, the employees are not really recognized. They were not informed, but now after flotation, they are more informed and they are well satisfied. Lenders. Before flotation, DCS was predominantly funded from shareholders' funds and had few borrowings. So these stakeholders have little power or influence and possibly little interest in DCS, particularly if the loan capital represented an insignificant proportion of the lender's total portfolio. But after the flotation, DCS has become increasingly more highly geared in order to expand into new markets, and therefore the risk faced by lenders is greater, and this increases the lender's level of interest in DCS and its ability to sustain this level of borrowing and to repay the original capital. So as lenders have placed legally binding covenants on the companies, preventing it from exceeding its current gearing level, it also has more power over DCS, meaning that DCS will have to keep lenders well informed and certainly keep them satisfied after flotation. So that's it.
Do you see that presentation?
Yes, sir.
Do you see how professional it is? With this, you will get your full 12 marks. I mean, no, sorry, 30 marks. If not 30, full 30 marks, at least you get 10. Richard, do you have any question?
No, none for now.
So will this improve your presentation skill?
Yes, sure. Yes.
Adiza, what of you?
Yes, sir.
Okay. Thank you. Those are read. And the reason why I asked you guys to read this, you hear most of my voice. At least from the way you have read, do you think it's a stress for you to read? Or I should be the one continue to read and explain it? Honest feedback, please.
Yeah, it's okay. It's okay this way.
Because I believe if you are doing active, when you are even watching the video, it can jumpstart your brain. Oh, when I read this is what we discussed. Please, whatever feedback you have, let me hear it. Say it to me direct. I won't like the director calling me and be telling me something that my student can tell me. I like to adopt this approach because when students are involved in the answer, by the time they are solving by themselves, it guides them a lot. And it limits how students are distracted during the class. So let's quickly look at the remaining aspects, which we have already mentioned in the class, but I just want to like.
Can I please ask a question?
Okay, what's the question, Ogechi?
I just wanted to know, when we talk about after the listing of the company, the shareholder, they say their interest is going to be their powers are going to be reduced. So is it in relation to the running of the day-to-day activities of the company or the overall company? Because I feel like, I was like, if
the overall company,
shareholder, okay,
because
their
it's now
powers
floated
to do what?
And that's what we call dilution, shared dilution. Do you remember?
Okay. Yes. I know.
Let me set an instance. You are a couple, you have 2 children, and you're also a couple, you have 7 children. Which one will be enjoying you pass? When you are not Obi Kubana,
yes,
you are a normal person, not Obi Kubana. Which one will be enjoying you most?
The two is better. The two.
Why by 87? If they buy 3,000 bread, you know go do them. But 2 people, they buy 3,000 bread, they don't go chop and finish.
Okay. It's okay.
So when that's why some companies they don't like going to flotation, because you are now involving more people to come and eat among the pie of the cake.
More people, yeah. Okay.
So you can see that you can score 85 in next year. Do you see?
It's possible, sir. By God's grace.
Yeah. And when it's 25, just come back to me. I will refund you exam fee. Mr. Richard, you want to say something?
Yes, sir. I wanted to add that also, because the new shareholders are coming in, there is going to be a board that will be managing for them. So the focus will be more on the board and a bit less focus on all the shareholders directly.
Thank you very much. So can we proceed?
Yes.
Okay, so for this one, I've already shared material that will help you on that, but let me just explain. So reporting these days, for some that are CFO, you see that reporting is getting more difficult. And things are madly serious. Unlike before, when you just present financial and it's over. Now, when you are looking at the pack for financial statements, these are some of the information that you needed. Integrated reports, sustainability reports, we now call it environmental and governance, we call it ESG. Remuneration reports. There's another report by the board audit committee. You will hear the director's remark, the chief executive's report, the chairman's report. Most of this information are to comply with corporate governance framework to ensure that timely and accurate disclosure are made on non-material information that regard the company, so that other stakeholders will be properly involved. So for the first part that we call integrated reporting, ESG is also a topic on its own, but let me start with integrated reporting. When you have something like integrated, it's like you are concisely reporting. It's aimed from integrated thinking. ACCA started training us this topic around 2016. That's when they started teaching us around integrated reporting, integrated thinking. It's just how to concisely put an organization's strategy, governance, performance in a formal context that can be understood by relevant stakeholders. You know, for a company, we have 6 capitals. 6 capitals that make up how a company is being run. And for the 6 capital, they work hand in hand. The first one is financial capital. We all know what financial capital is. That's the resources we are using to run the organization. And the financial capital is always abused. Most people that are inside this, the financial capital is always abused through creative accounting. If anyone here there is a CFO that has never done creative accounting, I will swallow the person. You see, they've done financial, what do you call it? They've turned financial reporting to a kind of, the more you look, the less you understand. And when you how financial capital is being managed, it's being bastardized. So when you hear financial capital, it's just a pool of funds that is available to the organization. And it can be from the owner and it can be from debt. That is financial capital. Then when we now talk about manufactured capital, these are the building, your non-current assets. Your non-current assets, those are majorly your manufactured capital. Also, your contingent assets too can fall in that category. But most of the time, contingent assets are mostly classified as intellectual capital. So intellectual capital, they are mostly intangibles, like intellectual property, the knowledge. You know, most companies have their knowledge that they are using to run the company. Like Coca-Cola now, they have informers that nobody can understand. And we also have something around, they call it brand management. Yes, branding. Branding, you know, marketing is a sub-element of branding. Marketing and sales work on the branding. That's why branding is part of intellectual capital. Then human capital, this is the most important and the most dangerous in the organization. They say God, when God created human, that's when God knows. Two of us. Human involves something around competency, capability. We'll look at that when we look at strategy next week. Something around competency, something around capability, and experience. You know, the way a company is being run is tapped on the core competence and core capability of individuals. That's why you see the way GTP is being run is not the same thing. FCMB is being run. It's not the same thing UBA is being run. These are due to different human core competencies, capability, and evaluated experience. Also, there is another capital. Here, you call it social and relationship. Social and relationship are those people, what we call institution. You know, we talk about institutional investor, people investor. Those institutions that are within the organization, they are the ones that will dictate the norm, the history, the behavior, the value. Remember, we talked about that last week. So those social relationships are the social relationship capital. Then we have natural, I love this. Natural and the renewable and non-renewable environments, like rain, air, water. There is something we call diversity, biodiversity. Biodiversity. Now, they are bringing diversity to human beings too. That the way a company should be run should be in a diverse way. That's what we now hear, diversity of the board. So most of these 6 capitals, they work as major inputs. Major inputs for the company. Before they can form major inputs, they must pass through governance. Look at the screen very well. If you see, look at governance. Governance work with purpose, mission, and vision. So based on the risk and opportunity, these 6 capitals will form an input. And considering the risk and capacity opportunity, we will now embed strategy. That's why our next topic next week is strategy. We will now embed relevant strategy to allocate resources. This will now form business activity in line with our business model. And whatever output we are having, the output must align with our performance and to create a proper output for us. For the business model and business activities, our output must align with our performance to create a better outlook for us. So if you now combine the outlook and performance, we will now have created a refined financial, whether be it increase or reduce, will now be a refined financial capital. Will now also be a refined manufacturing capital, refined intellectual capital. You know, before you start the process and when you end the process, your intellectual level must have changed. Your branding must have increased. And if I ask you now, most of you, which bank do you bank with? Most of you will mention different bank and you have your reason. And also the human aspects must have been refined. Either some have resigned or more have been employed. And also, relationship aspect must have been refined. All what integrated reporting is saying is that when the financial capitals are being involved in the particular process through the business model, the outcome is always a refined process that must have either create value or must have erode the value that exists initially in the organization. And based on that, if the value erosion is created, it will have negative impact on the social and environment. That's why when we hear footprints, social footprints, environmental footprints, economical footprints, all that is pointing to the social and environmental effects based on the of the state capital that we have. If you are not clear about the state capital, please let's talk now, because you cannot avoid this question in your ECCA. You cannot avoid question around this integrated report, and you can see question number 2 and 1 in the assignment I have with you. You talk about this capital. I was able to explain it properly, and I've also shared a material and a video that will guide you to properly understand this aspect of sales capital. That's why you are just joining. Welcome. We have shared some material on the charts. Please get them. So let's look at the sustainability. Whatever the effect of our capitals, it must create sustainable. What sustainability is? Acting in a way whereby our present does not affect the future. Acting in a way so that our present do not affect our future. And so there is what we call sustainability accounting. And it's now the really aspect of accounting, sustainability reporting. And that's why I want you to know about all this, so that by the time you started practicing, some people, what they are practicing is sustainability reporting. Look at those big 6 or big 4. They have a separate partner that is charged with sustainability reporting. What are they doing? What are they saying? They're also talking about how financial reporting can benefit and have positive impact on 3 aspects, not solely on profit, but also on people and the environment, which we call the planet. When you hear triple bottom line reporting, it's an aspect of sustainability that is guiding the way and how the environment is treated, in not mainly basing company activities on just profits, but also on the environment or planet and the people. So when we talk about the impact on people, impact on profit, or impact on planet. Impact on profit is economic. Impact on people is social, while impact on planet is environment. So in the exam, if you want to explain it, impact of profit is economic. Planet is environment, while people is social. So if you look at economic, which is profit, you must look at the gross profit, must look at nature of business, and which depending on imports, how do we have positive impact on the economy? So not solely basing on profit, but that profit, how are we deriving it? Then on the social, which is the people, what are our health and safety records? It must have observed some Lebanese companies that are operating in Nigeria, they always have negative outlook because of the way they treat people. And some of them, they avoid tax. And some of them, they make use of what I call casual labor. They don't have cost staff. Maybe they have few Indian guys, Lebanese guys that are their staff. But the rest, who are Nigerians, are casual labor. Those are negative impacts. Then on the environment, what are they emitting to the soil? The water, are they polluting the water? All what you are seeing on this screen are likely answered when asked about impacts of sustainability on the environment based on the 6 capital. Then we have what we call IMSS. IMSS talk about ISO standards. but ACCA does not often disturb you on this. But because you are practicing, that's why I want to quickly brush on this. That's what we call PDA, PDAC, plan. When we plan, we act. No, when we plan, we do. When we do, we review. Then we check. Then some we say, when we plan, we do, we check, and we act. Some people say, no, we plan, we act, we check, and we do. Either of it, all what is planning towards is reasonable sustainability. And if you download this standard, ISO 1401 and 1404, 1405, or IMAS, you will see that they employ companies that when you are planning, plan so that whatever your output will be, we have positive impact on the environment. Wherever you are acting, act in such a way that it will also have positive impact on the environment, on the people, and on your profits. Also do, whatever you are doing, must also have positive impact on the people, on the planet, and on the environment. Same thing also what we are checking. And this one, when anytime we are carrying out the audit, we always make use of this ISO standard. And this review is not compulsory, it's voluntary. So most companies normally engage people like us to help them carry out this review to see where they are doing wrong. So by the time they are reporting in their financials and people make a check, they will actually give them kudos and honor their capability. So I've shared this material with us so that we can read more on it and have a proper understanding of what it entails. So this one will now take us to public's function of board of director. All this we have narrated. What is the role of board of director? And how would they be involving the board committees and their remuneration? So when we're talking about the board, remember initially, when I say diversity, we have diversity of the board. We talk about who are those that make up the board. Male, female, their qualification, and their background. That's what we call board diversity. Then the board structure, we have two various types. Unitary and tiered board structure. And based on that, we also look at the non-executive director. Who are those that we call non-executive director, and what is their skills? Here, I will differentiate between independent and non-independent. Independent and non-executive director. We have two types of non-executive director. Independent non-executive director and normal non-executive director. So we look at several committees. I've discussed this earlier, but I just want to brush through it. When you look at a company and you have a successful company, it's being led by effective and entrepreneurial board who think outside the box, who think as if there is no boss, and who promotes long-term sustainability success for the company. And as such, they're generating positive value for the stakeholders and the wider society. This is now UK Code of Government 2024. It's no longer 2020, it's 2024. So when we are measuring board leadership, those words in red are the key terms. You can see effective and entrepreneurial board, long-term sustainability, and contribution to wider society. For the long-term sustainability and wider society, those are what we consider in previous slides. Those are what we consider in previous slides. Somebody is out of the class. Those are what we consider in previous slides. Now we are focusing on the effective and entrepreneurial board. So when we can look at the board, what makes up the board? We have the chairman, who is also part of the non-executive director. We have the chairman, whether chairperson or chairman. We have the non-executive director and independent non-executive director. Then we have the CEO, managing director, and executive director. Then Those two can make up of either, they can make up to be either unitary board or two-tier board. So for non-executive director, they play a strategic role. That's why board committees, they consider strategic issues. When we are looking at strategy next week, we'll delve more into it. What is strategy? Way in which and means in which they achieve long-term goals for an organization. And those long-term goals are being tracked through the performance of the board. On an annual basis, there must be an independent body that must carry out appraisal on the board of directors and now rate them on how they are performed. And this rating will consider risk management and people. So when you hear issue about non-executive director, they play 4 key roles in strategic, making strategic choices, optimal performance that benefit the company, effective risk management, and people management. So they must have the right skills. First, integrity. To observe the last question that we solved, you can see where it's driving towards. Integrity is number 1. Okay, do you remember when I talk about integrity? Integrity is number 1. Be it for the board or for the management. Integrity is number 1. Followed by their judgments. How are they passing professional judgments? Are they biased or unbiased? Then the willingness to challenge. Are they proactive or are they okay with the status quo? And do they have good interpersonal skills? Most of, if I ask you, have you seen your MD before? Some will say no, they've never seen their MD. That means your MD lack interpersonal skill. If your MD is good with interpersonal skill, at least you must say once in 6 months, you see your MD. Either the MD come around your table or your office and say hi to you guys. MD must not be too busy. That in 6 months, a staff will say, me, I don't need to see my MD. No. It's part of their interpersonal skills. But there are threats to independence for non-executive director. If you go through the code of corporate governance, you will see a principle whereby when a former employee of the company cannot be a non-executive director until having served so number of years. Minimum is 2 or 3 of the industry. So if an MD resigns from a company today, he cannot just immediately jump on the board to be the chairman. No. He must have a cooling period of 2 or 3 years. Also, a former CFO cannot just resign and chairman today and now jump to be the chairman of a board audit committee. No. It must be a cooling period of 2 to 3 years. So, any company that does not have that, maybe the chairman resign today, the MD resign today, and become chairman tomorrow, is a threat to independence. So watch out for those scenarios when you are solving your questions. So for chairman, for non-executive directors, there's something we call induction. It's like onboarding. For normal staff, there is onboarding. Also for directors too, there must be what we call onboarding. This onboarding takes the form of induction. Anytime a new director is appointed, or not only new director, on annual basis, there must be a kind of training for them. So aside induction, when you join the company, there must also be annual training in the form of training them on latest in town. IS security, AI security, recent happening in risk management world. So if you have a company that they don't conduct induction for their director, there will be a problem. Also, they must be properly skilled by giving them right resources that they can work with. And on an annual basis, there must be appraisal by an independent body. The appraisal must cover the chairman, the non-executive director, independent non-executive director, the MD, and the executive director. So let me call on Ogechi to guide us with an answer to this question. Likely answer. Just freestyle. Likely answer. Okay, G, can you give us likely answer to this
Yeah.
question?
Okay. Suggest the CPD requirements of each of the following board directors. The general board director of listed companies. I just want to digest. I don't know.
CPD is what we just discussed.
Yeah. I know.
Development, how their skills should be developed. And in your exam, they can say induction, they can say appraisal. But companies need to provide resources for developing the skills of their directors. So how can you apply that to this scenario?
Okay, the skills they require before engage. Okay, well, you need to
suggest the CPD requirements of each of the following board members. Oh yeah. Damilola, can you assist? Damilola, can you assist?
Sir?
Can you assist?
Maybe attending seminars for the board of directors, taking courses, maybe like ACCA. The same thing with audit committee as well. Updating themselves, like having updates regarding latest policy changes in laws, probably like tax law. Yeah.
You're on spot. Yeah, continue. Look at the screen and guide us.
Okay, all directors need to maintain a full understanding of the general environment in which their business operates. They will require regular briefing and training on general political, economic, social, and technological factor pests that will affect their work environment. Audits and remuneration issues, legal issues with direct effect on their roles as directors, management of human resources, risk management, interpersonal management skills, e.g. communication, negotiation, presentation, persuasion, time management, body language, team development. Technical issues directly affecting the business. So that's for CPD. So NED on audit committee. Although the UK code requires at least one member of the audit committee to have had recent relevant experience, all the committee members should ideally have relevant knowledge of audit and financial statements. So, for example, a general understanding of the roles of internal and external auditors, an understanding of control procedures, and an update to understanding of GAAP, e.g. IFRS. Therefore, in addition to the general training noted above, audit committee members should also have specific financial reporting skills training. Nomination committee. Members of the nomination committee will be specifically involved in executive search and selection. Therefore, interviewing skills will be a high priority, as well as other interpersonal skills, e.g. body language. They should also be kept up to date with benchmark comparison of directors' compensation packages, both nationally and internationally. That's it, sir.
So if you, in the question you have with you, any question around this, I'm sure you must be able to like tackle it. So the last one we take on this one is biodiversity. That is how you, sorry, biodiversity. I was doing a review on biodiversity like yesterday. It's not the biodiversity. This one you talk about based on the culture, based on the age mix, based on the tribe, and based on the what do you call it, background. So if you look at what we have here, they say what makes an effective diversity and what does it have effect? How does it have effect on the organization? Both culture become more relationship focused and collaborative because we are diverse. We need to gain knowledge from different aspects. That's why we see what they put here. They mentioned that high stock return, especially when diversity is well managed. This one is, if you look at the Bible, look at King Solomon, you observe that in out of all the kings in the Bible, he's one that does not fight any war. Do you observe? And yet church goer here, people that are comfortable with the Bible very well.
Yes.
Yes.
So why didn't Solomon fight any war? He has how many children? How many wives? 200 wives and 700 concubines.
Yes.
And how many children does he have? Probably less than 10. But which means probably most of his in-law are his country neighbors. For you to have like 700 concubines and 300 wives, that means most of your neighbors are your in-laws. So rather than fighting, you keep on marrying and marrying them. Why? And he has peace of mind. He no go to war. And when he died, nobody know that he has died. But for an ant, because they say he rested on his staff, people thought he was thinking or he was brooding. That's what I'm going about here. When there is diversity in the board, they will have strength. They will use that to their major strength. Wherever they have an issue. For instance, when Fidelity has that issue, around the Ziani time, when they say one money passed through their hands, some money to pass through their account, and it's being investigated. What did they do? Hausa man was the president. They appoint the deputy MD, who is an Hausa man, as acting MD there, who helped them to negotiate a soft landing for their embattled MD. What did he use? They use the power of region, power of diversity to douse the tension. Recently also, when they also have an Fidelity House an issue about about a judgment. About a judgment. A judgment against them. The main man quickly traveled out to go and meet the president in the country that he is to get a soft landing. And this is, so the issue gets resolved. That is the power of board diversity. When the board properly diverse in aspect of region, in aspect of background, they get it solved. In aspect of age too, it's important. Like based on CBN guideline, CBN mentioned that 33% of the board must be females. And board must not comprise of one particular tribe. So if I'm going for a company work and I look at their